Looking like this morning actually.
Very good morning to you, Vinny. But like you said, yes, the markets are trading much better than what the SGX Nifty indicated. But remember that this is just the initial hours of our trading session, and we've also seen the markets offer the day's highest point. Right now, it is actually now trying to recover the lost ground, but nevertheless holding to strong gains in today's trading session. Yet Sensex does surpass the 60,000 mark as well intraday trading basis. But let's also talk about what are the other sectoral indices doing, what the Nifty Bank picture is looking like as of now. Nifty Bank is moving in tandem with the benchmark indices. Today, you are actually seeing some sort of a recovery coming in the IT sector. So names like Tech Mahindra, Infosys, Wipro, all of them were actually trying to hold on to gains. For now, it is off the day's highest point. Talking about other sectoral indices, you also have Realty Index that's seeing a strong up move in today's trading session. Realty Index is trading higher by about 1.3% as we speak. You have Small Cap Index outperforming the benchmarks once again. Small Cap Index trading with gains of about approximately 1%. And so is Mid Cap Index seeing strength, 0.8% uptick coming in for the Mid Cap Index. So yes, and if you look at the sectoral indices, all the sectoral indices as of now are trading in the positive territory. Talking about individual names, you have Adani Ports seeing strength of about 2.9%, Tech Mahindra seeing gains of about 2.3%, Infosys, Bajaj Finance as well are seeing strong gains in today's trading session. On the flip side, you have only a handful of stocks that are actually declining, only 6 Nifty stocks that are declining in trade today. And out of that, you have Shree Cement that is actually seeing some sort of profit booking take place today. It's down about 1% as we speak. And talking about cement space, Vinny, yes, we've seen a sharp up move over the last 1 week for the cement counters. No doubt today some of them are subdued in trade today. But yes, strength, they are building on strength.
Absolutely building on strength, and that is what we will be talking about in our VNSN lens as well. A lot of triggers that will be playing out for the cement space as well. Like Sharon mentioned, a very good move that we have already seen coming in the cement stocks, not only the large cap but the mid and smaller side of the cement space. The companies are also doing quite well. But before we bring on board our guests, let's actually go across to the management of JK Cement, who spoke to ET now. He gave us an understanding on how the demand front looked like for the cement industry. We caught up with Rajneesh Kapoor. So let's go across and listen in.
Demand story for India is very good because both in terms of, the requirement of construction activities to be done at an individual house owner level, as well as the infrastructure push that the government is giving in terms of roads, in terms of, various metro projects and so many other projects happening. As also, do not forget that we are going to enter the last 18 months or 24 months of an election year. And generally, before the election time, a lot of projects tend to be completed, and therefore there is a speed up. So I don't think that the demand is going to be impacted. I personally feel that in the current year, we will end up with approximately about 7 to 8% kind of a demand growth. So far in the year, the Q1 we had a great volume demand increase in terms of 15 to 17% for almost all the regions of the country. And in South specifically, the demand was pretty high, with some companies clocking a demand growth of between 30 to 50%. July and August, we have seen a muted demand of about 2 to 3% growth. And in September, I expect this is going to pick up. So I feel that the Q2 might end up at a 4 to 5% kind of a volume growth. But Q3 onwards, I see no, problems as far as the demand is concerned. So I think the demand part looks to be quite okay.
All right, so that's the view coming in from JK Cement management. But let's move on and let's get on board of our experts today to talk more on the cement sector and where it is headed, what seems to be working for the space now. We have Mr. G. Chokalingam joining us on the show. Along with Mr. Chokalingam, we also have Kunal Bothra, as always. Very good morning to you, Kunal, as well as Mr. Chokalingam. Thank you so much for joining us on Buy Now, Sell Now. And a lot seems to be working in favor of the cement counters right now, Mr. Chokalingam. They've gone ahead and taken the price hike. You're seeing consolidation take place in the particular sector. How is the future looking to you? Do you think that you should only look through a medium-term lens, but or if you look at the longer-term picture, it is still a strong bet to take?
Certainly, long-term outlook is extremely impressive. There is no doubt at all. As all of us know, India still remains as the fastest growing economy in the world, and capex, is going to definitely improve a lot. To some extent, it has improved, but it is not the level we have seen pre-COVID level. But short to medium term, that is around 6 to 12 months, I still have little pessimistic view on cement industry because, as we all know, a tremendous capacity expansion is announced by almost every major player. On the other hand, fuel costs are very high. There is no sign of fuel costs going down. And the current capacity utilization is also around 65%. So with the kind of capacity expansion, I am afraid that in 6 to 12 months, they may not have a solid growth in the profits. So I'm pessimist on short to medium term, 6 to 12 months, but I'm very optimistic in the long term.
Okay, Mr. Chokalingam. But Kunal, you know, Mr. Chokalingam is surely very optimistic on the India growth story coming in as well. What are your views coming in on the cement space? How, which companies actually are you looking at in the cement space? Because we've already seen a good move last week coming in. Now, what is that we are expecting? Because last week, the small size cement companies also started doing well. So what should one be looking at here in the cement space? Which companies are you looking at?
So good morning, Vinny. Good morning, Cheryl and everyone. My sense is that the cement stocks have run up too swift, too fast over the short-term charts, and many of the indicators have actually come back into an overbought territory. So, for example, I have mapped out the charts for Shree Cement, and looking at the RSI levels where the stock has come back towards a previous overbought zone in terms of RSI, and wherever that has happened for Shree Cement, the stock has taken a pause for itself. In fact, over the short-term charts, historically, we've seen the stock getting into a slight corrective mode as well. So I think looking at the last 3-4 days of run-up for cement names, I would be a bit circumspect of initiating fresh longs at current levels and would actually wait out for a corrective phase over the next 1 to 2 weeks. And if these stocks correct, say somewhere in the tune of 5% to 10% on an average, that could be a better point to try and chip into the cement pack.
Okay, that's an interesting view coming in there. And surely, if there is a correction, then one should look at it, a 5 to 6% correction. Maybe we could look at something like that, is what Kunal is saying. But let's slip into a very short break, viewers. But don't go anywhere. We'll be taking all your stock-related queries. You can send them to us on Twitter, YouTube, or on our WhatsApp number as well. So don't go anywhere. We'll be back with your queries.
Co-powered by OLX Autos. Only OLX Autos
is costing you 25 rupees right now. After 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
the personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And before we kickstart with your queries, let's take a check on the markets. And Kunal, today Sensex surpassed the 60,000 mark. Last time when Sensex did surpass the 60,000 mark, you said the next level to watch out for Sensex was the record high levels. Do you have the similar views now, or things have changed over the last 2 to 3 weeks?
I think it's very similar. I think we've crossed about that 60,000 mark. 60,500 was the previous high. So I think as a like-to-like comparison, when the Nifty had touched or tested that 18,000 mark, Sensex had made a high of 60,500, 520 approximately. So I think that remains to be the next benchmark. But I would believe that we are on course of the indices coming back towards the lifetime high levels pretty soon. I think now it's a matter of patience as well as time, where the indices would break past about the all-time high levels, given the kind of global scenarios shaping up. So I think bullish on Sensex from current levels, and would expect a buy on dips opportunity for someone who's looking to buy. I think these are classical entry points, and if there is any kind of an intraday dip or swing dips which happen on the index, 300, 500 points on a daily basis, good levels to try and add on.
All right, so that's the view coming in on Sensex, and with that, let's kickstart with the query segment. And as Vinny said before we could hit the break, that we are live on YouTube, Twitter, Facebook, all the social media platforms. Write your queries to us on that, or also you can write it to us or via our WhatsApp number that is flashing on the top of your screen. Do mention your name, the stock that you want views on, and if you've purchased the stock, do mention the quantity and also the price that you bought the counter. So let's kickstart the query segment. And the first one that I have is from Uday Prabhu. He's writing to us from Bengaluru, and this one is for you, Mr. Chokalingam. He wants your views on adding large quantities in Titagarh Wagon, PSP projects and Aarti Industries. He wants to know what should he do. Does it make sense to add these counters at these levels or no?
Titagarh Wagon has already moved up a lot. I would rather wait for September quarter results before taking a view on a large accumulation.
Kunal, coming to you for the next query, and this one is coming in from Hemanta, and this one is on KPR Mills. Now, they've said that they bought 40 shares of KPR Mills at around 569 rupees per share. What would be the short to medium term target for this? And also, CRM Silk Mills, they're holding that as well. So what should one be doing with these stocks?
So KPR Mills, I would suggest that from a short-term play, you can look out for maybe a 620, 625 as a target. I think the only concern when I look at the charts is the lack of momentum, and the 200 DMAs, the 50 DMAs being absolutely flat in terms of slope for themselves. So maybe that's the only reason why I believe that the stock may not get into an immediate breakout unless there is any kind of a news flow or event which comes by into the stock price. So you may probably take it stage by stage. 625 could be an immediate target for KPR Mills. CRM Silk on the other hand is actually a chart which is actually broken down of its 200-day moving average as well as a swing support. I think if I'm not wrong, it's almost at the 2-month low for itself. So again, a chart which is showing signs of weakness at a time when the markets are looking extremely strong. So would suggest to avoid this name as well.
Okay, the next query that we have is coming in from Hyderabad. Ms. N. Lakshmi Nagini is written to us, and I will request my producer to show the stock of Vinati Organics. So that's the counter we're going to talk about. Holding about 4,800 shares of Vinati Organics at a price of 3 rupees per share. And why 3 rupees per share? Because our viewer has been holding the stock since its IPO in 1992. Mr. Chokalingam, the viewer now wants to know what's the prospect of the company and should hold on for much more longer term than already held. 1992 is the time when the viewer got allotted with shares of Vinati Organics. 3 rupees was the price, right now upwards of about 2,000.
You can hold on Vinati Organics because it's a growth stock. It has been consistently growing its business and profits. For long term, you can continue to hold.
That's the view coming in on Vinati Organics. Kunal, the next one actually is coming in for KNR Constructions. Maleshwar wants to know whether they should buy this one at the current price for a short term.
Well, I would suggest to avoid. I think the stock is still reading below its 200 DMAs, showing signs of weakness. The candlestick patterns are not attractive for KNR Construction. Even today, the stock made a fresh dip, I think closer to that 234, 35 mark for itself. So weakness in short term as well as on the slightly medium term charts, I would suggest to avoid.
Okay, this one is to you, Mr. Kunal. This one from Ramki from Delhi. If someone wants to invest, do you think there's a probability of reasonable corrections in near future, or should one just start correcting right now? Investing right now.
Well, I think it depends on what you're buying and then what's your time frame. I think given the kind of the state of the market right now as well as the global scenario, I would believe that these are good prospects that one starts sorting out the portfolios. I think there are many sectors which are doing pretty well for themselves. So it all depends on what you're buying. If you're buying the leaders, large cap names, then I think any time is a good time to try and buy the stock, whether it's large cap stocks from the banking ones, financial names, IT, etc. Those are very good times to try and chip into these names. And if you're buying mid cap names, then possibly the bus has already left the stop for itself, and many of these mid cap stocks have rallied up high in the last 1 to 2 months. So you may have to probably try and wait out for some time over there for the mid-cap stocks to correct. So for example, as I was pointing out earlier, for the cement names, many of the cement stocks have run up 10-15% higher in a very short span of time. So you have to wait out for a correction in those kind of spaces. So it all depends on what you are looking to buy as well as what time frame you are looking to play with.
Right. Mr. Chokalingam, coming to you, we have the next query which is on BPCL. This is from Jugal. They have BPCL 220 shares at a price of around 340 rupees per share. With a long-term view, should one continue to hold this or sell the stock?
One should not hold the PSU refinery for long term, because if oil price goes up, they get punished, and if oil price falls also, they get punished. So I would say that play only for short to medium term. I don't advise adding it also further. So if you are holding it and if you are able to get even marginal profit of 5-10%, it would be ideal to exit PSU refinery stocks.
All right, the next query that I have is coming in from Mr. Suresh Vasudeva. He's writing to us from Bangalore, and he's saying that he's holding about 1,500 shares of IOL Pharma and Chemicals at an average price of 482 rupees per share. He's asking, when can he expect an uptrend in this counter? Kunal, what are the charts indicating for you for IOL Chemicals?
So I think current levels is a good point where you can look to buy, because the stock is on the verge of a breakout for itself. 200 DMA breakout, swing breakout on the charts. Volumes have been quite okay for IOL Chemicals in the last 1 month. So I think looking at all of those points, I would be of the belief that current time could be a good time where you can look to chip in. The only concern is that you'll have to have a lot of patience, because such kind of stocks, they generally do at times have a false start in between, false breakout, and then they remain sideways for a slight bit of more time, and then they move up higher. So that's the only concern with a stock like IOL Chemicals, but otherwise I think it's a good setup.
Okay. The next query is on Federal Mogul, and this one is coming in from Mayank, who's holding 3,000 shares of Federal Mogul at 270 rupees per share. Mr. Chokalingam, he wants a long-term view, 2 to 3 year holding perspective. What should be the view coming in for this one? Mr. Chokalingam? Okay. Kunal, do you have a view coming in on this one, Federal Mogul?
Well, I think you should hold the stock, I believe, at 290-95 plus levels. It's a stock which is recovering quite well. It's done reasonably well from the 2009-10 lows for itself. So it's a stock which is trying to find its feet back again. I would suggest that if you have a long-term time horizon, you should definitely look to hold.
Okay, this one is from Pratisha Kunal, and this one is for you. She wishes to invest in one stock of Adani Group for a period of a year. So she wants to know which is that Adani Group that she should look at.
So I think I would still go with Adani Ports as a buy. I think over the last few months as well, many of these Adani Group of stocks have done reasonably well. But the one which is liquid enough, the one which is has a high degree of risk reward, and as also a part of the large cap fraternity, I always prefer those kind of stocks from a sort of a space which has done exceptionally well. So it's always better to try and pick those kind of names. Adani Ports is what I would recommend. I think, if I'm not wrong, the stock is already at a fresh lifetime high, and I think in just the last one and a half odd week is where the stock has seen almost a 10% kind of a rally. So even at current levels of 920, 930, looks very attractive.
Okay, but Kunal, shifting gears then to the Tata Group and Tata companies, we have a query coming in from Tata Consumer Product. This query is coming in from Abhilash Roy, who is from Calcutta. Now, they want to know how do we expect the charts to move for this one in the next 4 to 5 weeks? So it's a short-term view, and they've bought it at around 822 levels. So what should they be doing with Tata Consumers?
See, I think it's a good stock. It's trying to get into a breakout mode. I think the entire FMCG pack has done reasonably well in the last 3 months. They had a fabulous month of July, somewhat a tepid month of August, and now they're trying to just about get into a breakout mode yet again. My sense is that these stocks may probably take some bit of more time, maybe 1 or 2 weeks of more consolidation for themselves, but hopefully in the second half of the month of September is where I believe that these stocks should try and pick up pace back again. So I believe if you are more of a positional player with a 4 to 5 months of time frame, I would believe that you should definitely look to hold Tata Consumers.
All right, let me take this next query on SJS Enterprises, and this one is from Sheshma from Duvuru, who's writing to us from Tamil Nadu. SJS Enterprises has a counter since the levels of about 540 rupees per share. Kunal, do you have a view on this one? I know it's a very recently listed counter, and we are actually facing some sort of technical difficulties with Mr. Chokalingam line. What's your view on this one?
Well, I would suggest to not to average at current levels, but maybe wait out for another 20 rupee drop on the stock. I think 470 or 465-ish, I think, is the 50-day moving average for SJS. And the last 4 to 5 days, the stock has seen some incremental sell-off, where I think it's the 4th or the 5th consecutive day the stock is falling from those 550 levels, which means typically that the selling is not over, and because there is no fight back from the bulls, at least on the short-term charts, which I believe could happen once the stock comes closer to its 50-day moving average. So maybe a 465-ish could be a point where you can look to average.
Okay, and we have Mr. Chokalingam back with us. Mr. Chokalingam, coming to you, we have this query coming in from Jaya Krishnan from Kerala. They want to know whether they can enter Bajaj Finance at current levels, and they have a medium to long-term holding period for this.
Yeah, it's a great stock, no doubt about it. But after a massive rally in the last 3 months, I would advise the investor to wait. If there is any even 5% correction, then it's better to enter, because already now it's trading at 7 times price to book value. Instead, you can look at a stock like Sundaram Finance or Sriram Transport, which are much cheaper than Bajaj Finance.
Okay, this one is from Mr. Devendra, and this one is for you, Mr. Chokalingam, no doubt, but he's only asking for a 1-year time frame about Tata Elxsi. How does this counter look to you, but for the shorter term, not for the long term? Tata Elxsi has seen a spectacular run-up, I'm sure, and it's off those high levels as well. So what should Mr. Devendra do? If he is looking to enter afresh, should he look at it now?
If it falls at least another 5-10% only, I would suggest, because it's solid growth story, no doubt, but the kind of P more than 50, when even the leader in the industry are struggling to enjoy 30 P, is not giving me comfort to enter at current level. So I would suggest him to wait for at least 5-10% correction before he enters Tata Elxsi.
Okay. Kunal, the next one is for you, and this one is coming in from Ashya, and this is on Infosys call option, and which they have of 1,600 September, bought 10 lots at 4.7. Could you help them with the stop loss and sell price? What should they be looking here?
I think you should hold on. My belief is that the IT stocks is getting into a turnaround mode, and I would probably sense that that's the reason why you've gone with a slightly oversized position over here. The IT stocks are looking quite attractive. They've done reasonably well last week, and they've started off this week on a good footing. So even if you have a couple of days of a bit of a tired session for the IT names, I would still believe that you should hold on to this trade, and possibly the stock breaks past about the 1600 mark. It could actually result into a big breakout for stocks like Infosys. So if you can probably hold on to the strategy over here, that could turn out to be a good play. And if possible, and assuming the stock comes closer to the 1600 mark and you become in the money, I would also advise that you roll it over to the next series as well, assuming the next series is liquid enough in terms of options.
Okay, Kunal, one more coming your way, or rather, sorry, Mr. Chokalingam, this is coming your way. Rabin Chatterjee wants to know about Sarah Sanitary. How is this particular counter? What's the long-term prospect looking like?
Again, this has created a lot of wealth in the past. I am sure in the long term it can create. But again, one can look at any possible correction in the market to accumulate Sarah Sanitary ware.
Kunal, this next one we have is coming in for you, and this one is on from Indu. She wants to know, keeping festive season in mind, can she look at buying Shopper Stop for 1-2 quarters? Would you suggest any entry level as well as target for this one?
Well, I would not, I would probably not put it into a seasonality kind of an effect. But then I think, yes, Shopper Stop over the short-term charts has been looking quite okay. If I'm not wrong, the stock is already at a multi-month or a multi-year high. The momentum seems to be quite strong. It's trading above all its averages. So trend-wise, I think Shopper Stop is a good buy at current levels, and assuming if the stock provides any kind of a short-term dip as well. So purely in that regards, I would suggest that you can look to buy.
All right, this next query is from Alma, as well as we have Leo that's asking a query on MRPL. Fresh entry levels, do you think right now makes sense, Kunal? And also, Alma wants a target price for the next 1 year for MRPL.
Well, I would suggest an avoid on MRPL. I think the stock is consolidating. The best, at least on the short-term charts, seems to be behind us. So I would suggest a clear avoid.
All right, so that's the view coming in on MRPL. Clear avoid is what Kunal has to say. But time for a break on this edition of Buy Now, Sell Now. But viewers, don't worry, we are not going anywhere. When we come back, we'll be back with your queries, and our experts also will be there with us. So just time for a break. We'll be back soon.
आग को फैलने से रोकना मुश्किल है.
And spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Idfc's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress. of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only...
Welcome back, and you're watching Buy Now, Sell Now on ET Now. Then let's keep it going with all your stock-related queries. And Mr. Chokalingam, coming to you. This query we have is coming in from KR Balan, and they want to know about BHEL. Now, they bought BHEL at 59 rupees as well as Brigade Enterprise at 480 rupees. Should they be shifting this from BHEL to another stock like Imami, or continue to hold them?
You can sell BHEL and buy,
IOL Chemical.
You can sell BHEL and buy contra call like, Wipro. And instead of Brigade Enterprises, you can consider stocks like DLF. I would believe that these two are better than what he is holding now.
All right, the next query that I have is for you, Kunal, and this one is from Bobby Jacob, and he wants to know about Radico Khaitan actually. He's saying that he wants to, whether he should buy Radico Khaitan at current levels, and what's your medium-term outlook on this one?
Well, as a stock, yes, I would suggest a buy at current levels, not sure as a product. But then, I think it's doing reasonably well. In fact, from the brewery space, there are two names which are done exceptionally well. One, I think, if I'm not wrong, was Global Spirit and Radico Khaitan, which had done exceptionally well from the sector from the 2020 lows, followed by United Breweries and then United Spirits. So I think it's good that Radico Khaitan is picking up pace back again and showing signs of leadership yet again. So I think it's a good stock. You can look to buy.
I like, Kunal, the way how you said that the stock is good. I don't know about the product. I like the way how you gave your disclaimer in that particular query.
Because I'm a teetotaler. So.
Yeah, exactly. Vinny.
Yes, let's move on then from that. And Mr. Chokalingam, coming to you. Arun wants to know about Yes Bank. They purchased 5,000 shares of Yes Bank at 14 rupees. What's the long-term view on this? Should they continue to hold this with a 3 to 5 year time frame? Yes Bank.
One can hold because there is a lot of support from the other institutions and banks. And secondly, the banking sector itself has improved growth prospects. All the way from 5% to now 16% is a credit growth year on year. So that should help all the banks, including Yes Bank. So therefore, you can hold it for long term.
He's coming from Rajan. He's writing to us from Gurgaon, and he wants to know about LIC. He already has 220 shares at an average price of 780 rupees per share. He's saying that the stock, after going 700 plus, is now back to about 650 plus. Mr. Chokalingam, he wants to know what's the prospect of this counter. He is intending to hold it for the next 1 year, but he's not sure what should he do. Mr. Chokalingam, this one was for you, for LIC. All right, I think we are facing some technical glitches with his feed. Let me move on then, and let me take this next one. This one is from Abhi. This one also is a long-term query. I'll wait for Mr. Chokalingam to come back online. Okay, this one's from Abhijit. He's writing to us from Bangalore. Metro brands for the next 1 to 2 years. How does this counter look? I know it's a recently listed counter, but Kunal, do you have a view on Metro by any chance?
Well, yes, I believe that it's a good buy at current levels, and the stock has this habit of getting into a breakout, shifting the range, and then going sideways, and then consolidating for 2-3 months. So I think first thing is that it's good that you're looking out for Metro brands as a 1 to 2 year plus kind of a time frame and not from a 1 to 2 month or a 1 to 2 week kind of a time frame. So that's a good sign. And the fact that the stock has now shifted the range higher, I think 750 seems to be now a new base for the stock price. So you can start at current levels, keep 750 as the other level where you can look to average further.
Kunal, we have this query coming in from Manish, and it's an interesting one. They want to know which stock should they invest in with a 6-month view. They've given 3 options. One is Wipro, one is Welspun Corp, or Amara Raja Batteries. They have exposure in none of these sectors. So would you be recommending any of these, or would it be something else?
I think I would probably look out for Exide Industries as a better play than Amara Raja Battery in case if you're looking at it from the battery stocks. And I think Wipro could be a good buy at current levels. I think 420-ish is where the stock is trading right now. IT index over the last few days as well, I've been voicing out that the index is on the verge of a big turnaround for itself. So probably from a timing perspective as well as from a near-term prospect, I believe IT stocks could actually turn out to be a good play from current levels. So I would believe that Exide could be a better buy. I'm not sure of Welcorp, but I believe Exide as well as Wipro could be better bets.
Okay, this next one is coming from Jagdish, and it is on Welspun Corp. He's already holding 800 shares at a price of around 248 rupees per share. Kunal, short-term view on this counter, and also for how long should he hold on to get a 10% return? And I actually have realized I have a couple of queries coming from our viewers. All of them are pretty set with the fact that they want 10% return from their stock.
Oh, I think let me know if you get any in your hand. But then I think purely from a short-term play, I think Welcorp is something which I believe could get stuck into a range. If I'm not wrong, the last 4 or 5 days, the stock has been trying to double in this range of 250, 260. I think a 10-point or a 12-point range for itself. It's finding a lot of difficulty to try and break past about the 260 mark. So I believe that you can probably look out for a near-term target which should be around this 260 mark, because when a stock tries to take a lot of time to consolidate at the higher end and is unable to break past about those levels, those stocks, they tend to get into a correction mode. So I think a better strategy is to try and exit or book profits closer to that 260 mark and look to buy back again on substantial dips.
Mr. Chokalingam, we have this next query coming in on Apollo Hospitals. This one is from Srinivas from Bangalore. Now, what they want to know is they bought 35 shares of Apollo Hospital at 4,300 rupees per share. Should they be looking to hold or book profits or shift to another counter?
You can hold on to Apollo Hospital. In fact, one can add also after the severe correction. I looked at it. The recent acquisitions and expansion plans give a lot of comfort. So I think from here it can rise at least 10-15%. So therefore you can add more Apollo Hospitals.
Okay, this one also is for you, Mr. Chokalingam. This one is from Puneet. The Gujarat Alkalis is a counter, 980 rupees per share is the level that he's purchased this one. How is the counter looking for the longer term?
Longer term, it's very bleak for caustic soda. In the latest Chemical Weekly magazine also they are talking about substantial capacity additions in China. And already in India, many players have announced the capacity expansion. So in the short to medium term, as the stock goes up, I strongly believe that one should start exiting all caustic soda companies' stocks.
Okay. Kunal, we have this next query, which is coming in from Manikandan from Malappuram, and they've bought Hindalco call option, September expiry, 450 at 6 rupees. What should they be doing with this one?
Well, I think you can look to hold the expiry. I think if I'm not hold the stock option, I think 6.5 is where the current option is. The stock is getting into a mild breakout mode. So you may look out for this strategy into two parts. One is assuming if the stock comes closer to that 9.5 or 10 levels, that could be a point where you may look to book out partial profits and then hold the remaining with a stop loss at your cost. Because if the stock breaks past about the previous swing high, which I think is around 445 mark for itself, that could be a big breakout point for Hindalco. So you may look to hold on to the option as of now and keep 9.5 to 10 as a level where you can look to book partial profits and then look to trail your stop loss there.
Okay, this query is coming from one of our viewers, Aarthi, and Aarthi is asking about capital goods sector or paper sector, which is the one that she should look at for the longer term, Mr. Chokalingam. And also, if you're saying paper stocks, then which of the paper companies looks good?
See, both sectors have rallied a lot. I would still say that if there is any correction in the paper sector, one can consider stock like West Coast Paper because long term looks good due to tremendous demand from e-commerce for even low end of paper packaging for, so therefore one can prefer paper sector to capital goods.
Mr. Chokalingam, I'm going to actually come back to you. We have this query coming in from Vishal, who's from Dubai, and they have sold KEI Industries at a profit. Now they're planning to buy HAL for a long-term play. Is that a good strategy coming in there?
Yeah, one can do that, preferably on small correction, because it has proven to be a strong growth stock.
Before we actually lost you on that line, I had asked you a query on LIC. I already had a viewer who already purchased this counter at about 750 odd levels, and the stock has been actually in and around on and off in that vicinity. So the viewer wanted to know what should he do with LIC. Also, I have Srinu from Vijayawada also, who has LIC holding from the levels of 656 rupees per share. So what should both of our viewers do? Stay put with LIC for the longer term?
One can hold on, but I won't suggest adding LIC now. Rather, one can add HDFC Life. Even yesterday we saw the company, the reporting double-digit growth in the premium, and stock also, down substantially from 52-week high. So I strongly believe that HDFC Life should outperform LIC in the short to medium term. So therefore, add HDFC Life, but hold on to LIC.
Kunal, this next query is coming in on Divyani International from Anyanta Chatterjee, and they want to know, is it a good time to buy this stock and is it a good stock to buy?
Well, yes, I think it's a good stock to buy, and I think I've been advocating the stock around this 160-70 mark for itself. Now, just about a week or two back, the stock had been briefly trading about the 200 levels, but now it's corrected back again. So I think 170 could be a good point where you can look to buy Divyani International.
All right, this one is coming from one of our viewers who's asking about KNR Construction. Anil Menon has written to us. He's saying he's holding 1,000 shares of KNR Construction at an average buy price of around 257 rupees per share. Kunal, he wants to know whether he should hold, sell or book loss. Also, what sort of value would he get for the KNR Constructions over the next 3 months?
So I think for KNR Construction, my belief is that the stock is getting into a breakdown mode rather than a breakout mode. So if you've already bought the stock, then I would think that it's a good time where you can look to exit. And if you're already holding, and if you are looking to average, I think this may not be a good price where you can look to average. So I would suggest a hold on that as well.
Okay. Mr. Chokalingam, this one is a long-term query coming in on Bank of Maharashtra versus Karnataka Bank. Sudeep wants to know which is a better one and a good to enter or average for a 2 to 3 year perspective.
Unfortunately, I'm not allowed to speak on Karnataka Bank because of the personal tradings. But I can definitely speak on Bank of Maharashtra. I believe that Bank of Maharashtra is the best PSU bank. Whether you take asset quality or business growth, it has been doing extraordinarily well, even in terms of access to low-cost deposits. So I believe that in 2 to 3 years, Bank of Maharashtra can minimum double. So one can go very aggressive in buying Bank of Maharashtra.
Just a note for all of our viewers who've written to us with regards to Reliance Power, Reliance Infra, Jain Irrigation, JP Associates, CCD. Just a note that we avoid taking queries on penny stocks on the the show. And this particular view is actually affirmed by both of our experts as well, Kunal as well as Chokalingam. So, Mr. Chokalingam. So, therefore, we avoid asking queries on penny stocks. We are not ignoring you on purpose. But let me move on. Kunal, this one is from Atul, and he wants a view on IDFC First Bank. He's asking that what sort of a target price should he look at for IDFC First Bank in a period of about 6 months?
Well, I would believe that possibly 60 could be a good target for IDFC First Bank over the next 2 quarters. But then, you could be in for a positive surprise even beyond that as well, because the stock in the last 2 months has shown good traction for itself. So I would suggest that, you should hold on. And also I would believe that if the stock assumingly crosses that 60 mark as well, possibly in the next 6 months, and goes beyond that, that could probably mean that there has been many longer term players as well as the bigger hands who have entered the stock price at current levels as well as at those higher levels. So the prospect over the long term also opens up quite well. In fact, 65 or 67 was the previous major high for IDFC First Bank in 2020-21. So if that level is crossed, it could result into a big breakout for the stock price. So 60 could just be a benchmark for IDFC First Bank, possibly over the next 2 quarters. But my belief is that the stock should be poised for much higher returns beyond that as well.
Okay, now let's get started with all the stocks on a rapid fire basis. The experts do know what they have to do. And Mr. Chokalingam, I'm going to start with you. We have a query on, the first one is on JSW Steel. Kiran wants to know, she's bought 50 shares of JSW Steel at 680 rupees. Should they continue to hold or sell it?
Sell it.
Okay, this one also is coming in for you, Mr. Chokalingam. Hari from Bangalore is asking about Tanla Platform's current levels of around 860 rupees per share. Can he enter right now for a period of 2 to 3 years?
I would rather prefer quality stock like Wipro rather than Tanla.
Okay. Kunal, short-term view on Tega Industries. What would you be suggesting? Should they stick to this one or move to Deepak Fertilizers?
Well, they can stick to this one.
Okay, Muktesh from Gujarat is telling that about Sona Comstar, average price, buy price is about 540 rupees per share, seeing some losses. What should he do, Mr. Chokalingam?
He can hold on, but once gets a principal back, he should exit the stock.
Kunal, this next one is coming in on Titan. We have a query from Richard. Is it a good time to buy Titan?
Well, yes, I think it's a good time to buy the stock.
All right, this next one is coming in from Krishnan from Goa. 300 shares Indian Bank bought at about 95 rupees per share. Please advise, can I retain for the next 1 year for good returns, Kunal?
Absolutely, yes.
Mr. Chokalingam, this query is specifically for you, coming in from Srini from Chennai, who's asking you to suggest one good growth stock for the next 3 years.
You can buy Nesco. I personally also hold it. I believe that in 1 to 3 years, the stock can double.
Okay, Kunal, Charmaine Sequeira wants to know about GAIL, 1,000 shares purchased at 107. Should I continue to hold or sell?
I think you should look to exit.
Okay, we have this next query coming in on Nelco. The viewer has bought 675 shares of Nelco at 597 rupees. Should they wait for good returns in the next 4 to 5 years, Mr. Chokalingam?
Certainly, yes. The aluminum prospect will definitely change in a favorable way.
Kunal, Dr. Sethu Murugan from Chennai is asking about Adani Enterprises, Adani Power. He's already holding both of them. Can he continue to hold on to them?
Yeah, I think you can trail your stop losses and continue to hold.
Okay. Mr. Chokalingam, this one is on Railtel as well as IRCTC. The viewer Arun is holding these shares. Should they continue to hold them or look to sell?
Hold them, and if you get to buy 10% profit, immediately exit or both.
All right, and with that, we come to the end of the rapid fire. Don't go by the clock timer that was flashing on the top of your screen. But with that, we come to the end of the queries as well as the rapid fire. Thank you so much, Kunal and Mr. Chokalingam, for joining us on the show and giving your view on the cement sector, as well as resolving our viewer queries. And viewers, if you've been unable to take your queries today, please do note that we really try to take as many as possible. But don't forget, tomorrow we will be back at 11 a.m. With the show where we'll talk about a specific sector on the BNS and Lens. And post that, we will take your queries. So we'll be back tomorrow. But for now, we have to slip into a break on this edition of Buy Now Sell Now. Don't go anywhere. Stay tuned.
Telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And let me bring on board my colleague Pankaj Podar to talk about Goldman Sachs top overweight and underweight stocks. And which are those, Pankaj? Take it away.
So they have done an exercise and they have said that which are the top 100 funds that they have and which are the stocks that are overweight and underweight within that. This is for the domestic mutual funds that they have done, which have an asset size AUM of about $120 billion. Now, top overweight names completely, it's ICICI Bank, SBI, Bharti Airtel. We'll get you couple of more in this. And top underweight names are likes of Reliance Industries, HDFC and Asian Paints. So they've done some screening analysis out of the Nifty 50 names. L&T and Axis Bank do form a part of the overweight list, as well as HUL and TCS form a part of the underweight list. So they've done an analysis of mutual funds, what they hold and what essentially it means. These are the number of basis points versus the index, which they are lower or higher. So for Reliance, it's 355 basis points, which is the highest. HDFC is about 200 basis points. Asian Paints, HUL and TCS are down by almost greater than about 100 odd basis points. Let's look at the overweight names as well. I think ICICI is the one that's on the topping the list and 164 basis point higher than the index, followed by SBI, and then look at Axis Bank, which is about 50 basis points. So overweight greater than 50 basis points and underweight in the Nifty 50 names by greater than 100 basis points. This is based on the mutual fund shareholding, which is the latest shareholding that they have seen.
Thank you so much for that, Pankaj. But let's move on. Jefferies sees a broad-based margin growth in sectors other than IT and metals and expects staples to see lower margins in FY24. Let's go across to Somit, who's joining in with us to give us more details on that. Somit?
Well, Mahesh Nandarukar in his latest note has picked as 12 best stocks that are expected to see a strong margin expansion over FY23 to FY24. Now, what he's saying is that over the coverage universe that Jefferies has, their margins are likely to bottom out in FY23, and from FY24 they're expecting an EBITDA margin expansion of close to 206 basis points on a year-on-year basis. Now, they're saying this broad-based substantial margin improvement would be across the sectors, but excluding sectors like IT and metal. Now, they have picked up 12 stocks that are expected to see strong margin trends, and they are Maruti, TVS Motor, Eicher Motors, Thermax, Adani Ports, Bharti Airtel, DLF,